The Philippine stock market is at a crossroads, buffeted by political uncertainty, high interest rates, and questions about corporate governance. Investors are also weighing the impact of anti-corruption protests, flood control probes in Congress, and the shifting landscape of capital raising. With confidence still fragile and new themes like renewables, infrastructure, and digital transformation shaping equity upside, the big question is how investors should position themselves now. And joining us to break down the signals from the noise is Manny Ocampo, President and CEO of Investment and Capital Corporation of the Philippines. Good morning, Manny. Welcome to the show.
Good morning, Robert. How are you?
I'm good. Now, Manny, you've seen the protests yesterday. How will the markets now react to the anti-corruption protests that happened yesterday?
Well, first, let me say that there seems to be a very clear signal that people are unhappy, and that government should really take that cue to institute reforms, and the reforms can be very quick. I think the sooner they're able to implement the reforms, the sooner that citizenry calms down and moves forward. But without doing anything, I guess we still get stuck. Senate doing all their investigations should result into judiciary action. So we hope that happens a lot sooner than later, Robert.
Manny, with the ongoing flood control probes that you've mentioned now, how is the market also reacting to that in terms of the market today and having an independent body also investigating the flood control projects?
Sure. I think these actions are positive to my mind. They set about at least efforts of the government to try to restore confidence in the government. And, the sooner they're able to do that, and investors seeing that the government is serious with this work, then we move back to, we're really back to business as far as I'm concerned. We've seen some positive notes from the market over the last week or so with how things are developing. That there seems to be hope that government will really take this seriously. They're putting in the right people. I think the appointment of Secretary Dizon to the DPWH, along with folks that complement complement his activities there at DPWH, is definitely a step in the right direction. The formation of the independent committee, we still have to see what the committee will come out with. Is it only fact finding, or are they going to start pointing fingers at particular groups? No? And then that passes on to the judiciary. Will we take these people to task?
Now, having said that, Manny, looking at the local business and economic environment right now, what hidden signals in today's market do insiders watch that most investors overlook?
Okay. Since last week, we've been looking at value turnover, which we've noticed there has been a bit of pickup. Net foreign buying is not quite there yet, but we'll see over the coming weeks what the net foreign buying figures look like. We normally count that and see if foreign institutional fund managers are coming back, taking a look at the local markets. We also take a look at the trading actions of what we call particular lead brokers. Some foreign houses, a number of the local houses as well. We take a look at their actions in the sense that they maybe provide a gauge as to people coming back and volumes coming back into the market. Robert?
Now, when we observe, let's say, the protest that happened yesterday, with more and more Filipinos looking for more accountability and transparency, and with the ongoing investigations by Congress and the Senate and the independent investigations with the flood control projects, Do you see now that what's your observation in terms of investor behavior that tells us whether confidence is coming back in terms of trying in foreign investors looking to invest here and local the local market seeing more gains economically?
Sure. Right now, very early to say, but normally, things that we will look at would be, fund managers taking a look or coming to the Philippines, visiting corporates, and they would normally do that in this, time very timely in this last quarter, maybe preparing for their investment program for 2026. So they'll talk to corporates, they'll talk to the PSCI companies, what plans are, where they see where they see activity and all into the coming years. So that's usually a first step. If we don't see the fund managers coming in, then they're really not. Then the Philippines is still not in the radar map. Another thing that we look at would be we're very conscious about retail activity. So that's why I said that we like taking a look at the actions of particular lead brokers and see if there's, are they accumulating? Is there a slow accumulation of particular stocks happening right now? Are they buying aggressively, or are they switching over to from particular counters to new counters?
And
We
with high
also
Manny, and with high rates, how are firms now rethinking raising capital in terms of expansion, in terms of growing companies?
Sure. Rates have actually come down. They're still a lot higher than they were pre-pandemic, but with current actions of the BSP, rates are coming down, and the expectation of rates to come down further, we without reversing themselves, seems to be more real now. Uh, I'll have to say that for long term growth, companies are still looking forward to equity issuances, common equity issuances for long term capital, long term growth. No? But I guess we'll have to wait for the big IPOs that are planned to come out. What will be the results of the IPOs, for example, of Maynilad, which is coming up? And then the other big names coming maybe hopefully next year or 2027, people like GCash and SM REIT. So we're hopeful that the big names start to come, and then there's with the IPOs, people come back in droves, no, into the market. Now, having said that, a lot of the corporates with rates coming down are still looking at traditional either project finance or long-term debt or bonds as their go-to for interim capital raising. Um, Corporates are also looking at alternative structures. We've heard quite a few corporates looking at possibility of issuing REITs. They have mature assets already that maybe they want to generate liquidity out of. So REITs, may have more REITs coming out, and we understand with the SEC also looking at instituting amendments to the REIT law. It may be a positive step again on in that direction for the REIT asset class, Robert.
But in your observation, Manny, in terms of looking at the positive outlook and also looking at some of the negative effects of what's been happening, how can you now tell which is market noise from real long-term risk?
Okay, I'll say maybe current events become more noise than a a base of things to come. Um, the real risk that we watch out for would be leadership and governance. Not only in the government, there have been quite a few, listed companies that have been called out for on in terms of governance. So we're taking a look at that very closely. where the BSP takes interest rates, and how they are able to stabilize or defend the currency would be another thing. And then, obviously the performance over the medium term of our lead corporates would be telling also, Robert.
So are you saying, Manny, with all the noise that's and all the issues happening, the market is not really greatly affected as of now? We're not seeing that much of an effect yet, or will we see that in the next couple of weeks?
Well, no, I say that on governance and leadership
Hmm.
particularly, uh, we the, a lot of investors are still looking to government uh, to lead that area, and they want to see positive action. Then they come in and maybe come in with more investments that will take a longer term out.
Now, in terms of investments, Manny, looking at Alternergy, is showing growth but faces scrutiny. Now, how does the market balance growth versus governance, as you have mentioned?
Sure, thank you. Now, governance is clearly very important to a lot of investor groups. It becomes particular for the institutional investors that come in with more substantial investment funds. No? And these investors also, have their own principles that grade their investments. So they're very conscious about what they get into and the governance that these companies that they get into. Now, having said that, for Alter, I think the noise really came out when questions started to be asked about the GSIS
Hmm.
investment in the company, where unnamed sources were saying there were questions and all on the. I think at some point there was a question on the viability of Alt Energy. And because of that, there was a question on why was GSIS making an investment in that one. Well, now I guess with the Alter showing their June 2025 fiscal year results, I guess they're being proven that their business model, number one, works.
Hmm.
The reinstatement of President and General Manager Veloso back in the GSIS
Hmm.
after being cleared by the ombudsman also is a step in that direction that I'll call it that vindicates Alter and vindicates GSIS in making the investment in Alter.
So
Um,
does that mean
if
what you've mentioned regarding Veloci's suspension being lifted now, does the GSIS leadership now stability move sentiment or only for institutions?
Okay. GSIS is a key player in our capital markets, both in the debt and equity capital markets. The reinstatement of PGM Veloso actually provides continuity, provides stability, provides a way for the market to move forward. So there were you take away uncertainty. I think that was key in his reinstatement. Mr. Veloso and his team of professional managers, back at the helm of the GSIS brings about a stability. I'll put it that way, Robert.
Now, if we look at the other sectors, Manny, renewables, infra, and digital technology, which theme offers now the strongest equity upside?
Okay, I'll put it this way, Robert. Renewable energy and infra will maybe provide sustainable growth in revenues and profitability. So, if you want to take a medium term to long term view on things, then these are the themes you would want to be invested in. Digital or tech, which at times have been related to gaming in a way, or provide provide either a boom or bust scenario. So again, depends on your risk appetite. You take a look at those two different aspects.
You've mentioned a while ago about retail investors. During the pandemic, they kind of cooled off post-pandemic. Now, how should now they re-enter?
Okay. Just a perspective on
Hmm.
things. During the lockdowns, I guess we all saw this that people had time in their homes to take a look at different things. The stock market was one, and online brokers saw record account openings during this period. We saw that the IPOs that came out during the pandemic, right in the middle of the pandemic, saw their issues being well bid, and the demand was quite strong. No, and the demand was at that time was really coming from retail accounts when we saw it. No, um, retail investors will go to where returns will go. So when market returns started to slow down, and they shifted to other investment, other asset classes like cryptos,
Hmm.
FX, and the like. No? So volatile, but the promise of good returns. Unfortunately, as a people, we are still fixated on get rich quick,
Get rich quick, yeah.
opportunities. Yeah. So um, as far as retail investors coming back, if new names start to come out in the market, new IPOs, for example, that
Hmm.
promise, good returns, you'll see them coming back in maybe the same the same way that they did during the pandemic, Robert.
And beyond earnings, what management choices do you think will define valuations this year?
Uh, it's really management communicating new strategies that they want to go into. I think from the big corporates, you know, some have declared that they're continuing to go into infrastructure, renewable energy. It's an old story, but it's still a sound story. But we'd like to hear maybe new themes from senior management on where they're going with things. SM, on the retail space, they are pivoting on, maybe giving their customers experience rather than a shopping, a shop, just a shopping mall to go to their. They want to play up, or they want to pivot into providing their customers or their patrons with experience in going to their mall. So that I'll say would maybe be a pivot as far as outlook and all is concerned.
And finally, Manny, what's the biggest blind spot Filipino investors have in equities today? And how can we entice more new investors to invest in the local markets?
Okay. I'll still stay with Robert with governance and leadership confidence. As investors, both local and foreign, become, maybe confidence and all come back and they see that government is doing the right thing. Foreign investors are really taking that cue from the locals that Filipinos we think are starting to believe in their government again. It should be positive in that respect. No? Now, so that also is the blind spot. Will it's exactly this. Then we have a situation where maybe people leave the market because of the lack of governance and the lack of leadership. So to our maybe our both our government and corporate leaders, they should really be very conscious about these things because uh, investors will be looking at that more than the numbers. No, now another thing we're worried about as a possible blind spot, and this really affects more, not only just domestically but on foreign impact as well,
Hmm.
would be currency risks. No, um, so we are looking at very globalized, very interconnected economies already. So actions in the U.S. on the cutting rates and what the impact will be on the Philippines and all would have an impact on currency. So we're we're very confident that the Banco Central, under their strong leadership, would do all the right things to address or maybe de-risk currency, or at least make it a lot more manageable. And that's something I think we have going for us compared to other countries, Robert.
Okay, on that note, Manny, thank you for joining us this morning and sharing your insights on the market. Thank you.
Thank you.